Good morning, all. As earlier decided, we are starting with our class on tax planning and tax management. I have unmuted you, all of you. So if you have any doubt while I'm taking class, do post your message in the chat so that I can read it and I can reply to you. Okay. Okay. This is an experimental session. I hope it becomes a success and you people appreciate it. Hope all are enjoying quarantine period. Right? Ideally spending your time? No. I don't want you to spend your time ideally, use it productively. That is another method. I have created the Moodle classroom. Every day I intend to upload at least 3 problems from each module. If we had a 1 hour class, we would have done at least 3 problems in my class, right? That's my assumption. Hopefully it is correct. So all of you have logged into your Moodle except Pallavi, I know. By today afternoon, I'll upload at least 3 questions from assessment of HUF in our Moodle classroom. You can do it in your notebook, scan it and upload it back in the site so that I can verify it. At least that way, even if you do not have any class, we can go ahead with it. Right. So let's start with our class. Today's class deals with tax planning and other tax related terms. Basically, they are tax planning, tax management, tax avoidance and tax evasion. Let's start with the first term, that is tax planning. We have come across what it means by tax planning. But again, for the sake of asking, I'm asking you, what do you mean by tax planning? Tax planning, I'm not going to the definition right now. Tax planning means you know what is your income for 1 month. Accordingly, you know what is your income for 1 year, right? Now, if this is my income for 1 year, what will be my tax liability? You compute your tax liability and do something so that you can reduce your tax liability. Now, how do we do this? We reduce our tax liability by taking benefit of all deductions provided under Section 80. Under computation of each head, we have got relevant deduction section. You take the benefit of those deductions under heads. Then there are various tax exemptions, exempted incomes given, concessions, rebate, relief, etc. You take the benefit of all those deductions, exemptions, etc. Thereby, you reduce your tax liability. So such a procedure is known as tax planning. That is why it is known as, it is an act with the 4 corners of the act. You are not violating any rules or regulations in this. What you are doing is, you are simply taking advantage or privilege of all these deductions granted to you by Income Tax Act. And hence it is said to be not a colorable device to avoid tax. You're not doing anything illegally. You're not violating any rule. You're complying to all rules and regulations. Thereby, it is a legal instrument. From the point of view of SSC, tax planning is very beneficial for the SSC because it brings down your tax liability. But from the opposite side, from the point of view of the government, it is very difficult because SSC's tax liability reduced means what happens is the government's income will be reduced. That is why the third point it is mentioned, it reduces inflow of cash resources to the government by way of taxes. Now, if you come to the definition of tax planning, it can be said that it is arrangement of one's financial affairs in such a way that burden of taxation of SSC is reduced to minimum without violating in any way the legal provisions. And this you do by taking the maximum advantage of all tax exemptions, deductions, concessions, etc., etc. Now, why should we go for tax planning? What are the objectives of tax planning? Tax planning, the first one, it helps you to claim deductions from gross total income under section 80C to 80U. Thereby, your total income comes less, which leads to reduction in your tax liability. Now, the third point is minimization of litigation. What do you mean by this point? There is always a dispute, a point of dispute between, it is a bone of contention between the SSAs and the authorities. SSC, in order to reduce his tax liability, what does he do? He unknowingly goes for tax avoidance or tax evasion, which is completely against the rules and regulations. So you should have a correct knowledge of all the rules and regulations, and legally you take the benefit of it. That is what we do in tax planning. And when you go as per tax planning, you're not violating any rules and regulation, and there will not be any dispute. The authorities will never question you what you have done, what you have not done. Thereby, it reduces the disputes. The fourth one, it is productive investment. You are legally claiming the benefit of all the deductions given in the act. You are investing it properly. You're either investing in fixed deposit with a 5-year time deposit, or it may be you're investing in mutual funds, or it may be like you're taking housing loans, you're paying interest, etc., which leads to productive investment. Similarly, investment in post office. Reduction in cost. How does it reduce cost? Reduces cost in the sense anything what you do legally obviously will increase the sales, thereby maximum production, and it reduces cost, minimum cost. It leads to healthy growth of economy and thereby employment generation. Lots of employment opportunities will be created. Now let's move on to another related term, that is tax evasion. Now tax evasion is complete opposite of tax planning. What happens in tax planning? Tax planning, like I said earlier, you are legally claiming all the benefits of loophole, deductions, exemptions, rebates, reliefs, etc. You're not violating any rule, you're not bending any rules, etc. Lawfully, legally, you're taking the advantage of all these exemptions. Whereas in tax evasion, what are you doing? You are openly violating the rules, regulations, etc. That is why it is said to be, it is illegal, it is immoral, it is antisocial, and it is an anti-national practice. Now, if you come down to the definition or what it means by tax evasion, it says that when a person reduces his tax liability by making false claims or by withholding information regarding his real income. I am not giving out while filing returns, I'm not mentioning my real total income. I'm suppressing, I'm withholding, I'm concealing half of my income. Thereby, I'm showing lesser income, thereby a reduction in tax liability. Now, what happens in Tax Act is, and since it is illegal, immoral, etc., very strict provisions have been made against tax evaders. Provisions have been clearly made regarding imposition of heavy penalty, institutions of prosecution proceedings, etc., against those persons who go for evasion of tax. Now, how can you evade tax? There are various methods of evading tax, and half of it we are familiar with it while computing business income, etc. I'll come to it. The first thing is that traders, they do not record sales, that is unrecorded sales. What they do is when they make a sale, they do not write a proper bill. So what happens is if they have sold around, if they have a turnover of around 1 lakh or 10 lakh and they show a bill worth 50,000, etc., there is suppression of sales. That is unrecorded sales. You all are very familiar with the next 2-3 points because you claim bogus expenses, bad debts, losses. You find lots of provisions or reserves or other expenses in your P&L account. While computing business income, you're familiar with all these expenses, right? What do we do with these expenses? We add back all those expenses which are not related to business. That is these bogus expenses, or it can be provision for bad debts, provision for taxes, etc. Or another method of inflating your expenses is you charge all your personal expenses. Like you have drawings, you have interest on capital, you have salary to proprietor, bonus to proprietor, etc. and you treat it as business expense and you debit it in your P&L account. Or another method is you claim that you have donated. You claim that you have charity, you have donation, etc., 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 and you debit all these items on your P&L account, thereby inflating your expenses and reducing your profit. This is another reason why we add back all these bogus expenses while computing our business income. Then another method is non-disclosure of capital gains on assets. You can have long-term capital gain on which you are liable to pay a flat rate of 20%, or it might be like you have short-term capital gain and you conceal it. You're saying that I'm not going to disclose it, I'm not going to, while filing the returns, I'm not going to mention about sale of a particular asset. Now, who is going to catch me? Now, if you are of that particular attitude, remember you're going for tax evasion. Or it can be like non-disclosure of income from binami transaction. You do the transaction, but not in your name, but in someone else's name. It can be your spouse, it can be your close friend, relatives, etc., etc. Or by showing excessive or bogus salary to near relative. We are familiar with this aspect. You might have come across the term salary to son or salary to your brother, which is unreasonable to the extent. We have come across these items while doing business income problems, which you find always these items debited on the P&L account. Or it can be like by not showing taxable income in return of while filing return of income. So these are the various methods of tax evasion. I hope I am audible, I am visible to you, and you are able to understand my explanation. Can you drop in a message in the chat box, all of you? Yes. Okay. Still now, I have not got any message from JC. Yes, got it. Okay. So, shall we continue? Okay. With your permission, we're continuing. Now, the next slide is a comparison between tax planning and tax evasion. Let's see what happens in tax planning. Tax planning is said to be an act within four corners of the act. That means you're not violating any rules or regulations. It is not a colorable device to avoid tax. It is not something illegal instrument which you are using to reduce your tax liability. It is perfectly legal. Whereas tax evasion is a deliberate attempt by misrepresentation of facts, falsification of accounts, including downright fraud. Now, in case of tax planning, you can see that the legal right of SSC, it is a legal right of SSC and it is a social responsibility. Every SSC has to do this. Act has given you permission to do such an act. Now, whereas tax evasion amounts to legal offense coupled with penalty and prosecution. Now, tax planning requires thorough knowledge of relevant act, social and economic and political situation of the country. It requires the thorough knowledge of all this. If you do not have any such thorough knowledge, approach a chartered accountant or a qualified professional. Whereas tax evasion simply requires you to have the courage to violate all the rules and regulations. That is boldness to infringe the law. Boldness to infringe the law means you should have the courage, the guts to violate all these rules and regulations. And if you are caught, be ready to face the consequences. Now, tax planning helps in economic development of the country by providing additional funds for investments in desired channels. That is why mutual funds, you have so much of investment avenues. You have mutual funds, you have banks, you have LIC policies, or you have Mediclaim policies, or it can be like post office savings. So all these are desired channels which calls for your investment, which leads to economic development of the country, whereas tax evasion simply generates black money, which will be utilized for, it can be smuggling, drug trafficking, etc., etc., all such illegal activities. Now, moving on to the next term, that is tax avoidance. What do you mean by tax avoidance? It is an art of dodging tax without actually breaking the law. See, tax avoidance stands somewhere in between tax planning and tax evasion. Tax planning is completely legal, whereas tax evasion is completely illegal. Now, what happens with tax avoidance is we are not violating any rules and regulation, but we are taking advantage of loopholes. You're not breaking the chain, like what they say, break the chain. We are not breaking the chain, we are not breaking any rules and regulation. But here, what we are doing is we are bending the rules without violating the provision. So that is why it is said to be an art. Very skillfully, you take the benefit of something what is not expressly written. അതാണ് bending the rules എന്ന് പറയുന്നത്. Bending the rules means you are not violating any rules and regulation. In an act, it is very clearly written what you should do and what you should not do. What we are doing is we are doing something what is not written, right? It is a method of reducing tax incidence by availing certain loopholes of the law. Or it can be defined as it is a device which technically satisfies requirement of the act. What act has said we have done, but we have not done in a proper way. We interpret the particular statement in such a way that it is beneficial for the SSC. Lawfully, there might arise a dispute, but then you can always fight from the stance that this was my perception while reading this particular statement. So from my point of view, this is not wrong. This is right? So you can always fight from that particular point of view. It is, but in fact, it is not in accordance with the legislative intent. So whatever is not said, you take the benefit of it. As long as there are loopholes in the law, tax avoidance cannot be checked by the courts. You do not have any particular way of um, uh, completely nullifying the procedure of tax avoidance. Now, this table gives a very clear comparison between the three terms what we have discussed till now. Something that is tax planning, something that is tax evasion, and something that is tax avoidance. Now, what happens in tax planning? Tax planning is a legal way of minimizing tax liability by taking full advantage of Act through exemptions, deductions, rebates, and reliefs. Whereas tax avoidance, the SSC legally takes advantage of loopholes in the tax laws. Whereas tax evasion, it is a completely illegal way by reducing the tax liability by deliberately suppressing incomes and hiking expenditure. Now, why do you do the aim of practice? The aim of practice of tax planning is saving of tax, whereas tax avoidance is hedging of tax. You do everything so that you need not pay tax. You're not saving tax, you're not paying tax, but you are hedging tax, right? And then for the other one, tax evasion, it is pure concealment of tax payment. When you come to the nature of tax planning, it is completely moral in nature. Tax avoidance is immoral in nature and bends the law. It's immoral but not illegal, whereas tax evasion is illegal as well as immoral. Now, tax planning results in advantages which arise in our long run. You make a deposit in a bank, 5-year term deposit. So at the end of the 5th year, you will get your money as well as your interest on it. So in the long run, it is purely beneficial. You invest your money in mutual funds. Immediately, you won't get any returns. But at the end of the term, you will definitely have a very amount, which is very huge amount, which has grown up capital appreciation highly. Tax avoidance leads to advantages, but which arise only in the short run. But in the long run, it is very detrimental. Whereas in case of tax evasion, either in the long run or in the short run, it amounts only to penalty and prosecution. Now, as regards to the legal implications, you can see that tax planning uses benefits of the law. Tax avoidance takes the benefit of loopholes of the law, and tax evasion clearly overrules the law. Now we are coming to the last part of our session, that is tax management. Now, tax management, you cannot practice tax management all alone. It is not a standalone concept. It is the first step towards tax planning. What you do is, like I said at my first slide, what did I say? I said that if I know that this is my salary for 1 year, likewise, this will be my salary at the end of the 1 year. If 1 month, this is my salary, at the end of 1 year, this will be my salary. Now, what do? If this is my total salary, how can I reduce the tax liability? I work on it. That process is known as tax management. What you do is you go to the understanding of your deductions, the deductions which you can claim, which will be beneficial to you. You make investments accordingly. All those activities are known as tax management. So that is why it is said as part of tax planning. It is simply a part of tax planning. It refers to compliance to all tax laws. You are not bending the rule, you are not violating any rule, but you are strictly adhering to the rules and regulations laid down by the Income Tax Act, or it can be any other act. Tax management, as said, it forms part of tax planning, where the planner saves the organization from payment of interest, penalties, and prosecution. You pay your tax on time. Thereby, you need not pay any fine or penalty or interest on it. Likewise, you're not violating any rules and regulations, therefore, thereby completely closing down the way of paying your penalty. Now, tax management has nothing to do with tax avoidance or tax evasion. Now, what happened? Now, the next point is it deals with compliance with tax rules and regulations. Tax planning without proper tax management or tax management without tax planning are completely useless. Like what I told you, filing of your returns. Before that, computation of your total income. Computation of total income means you first have to compute your gross total income. From the gross total income, you claim deductions under Section 80C to 80U. That is tax management. Accordingly, you compute your income, you file returns, do it everything on time. This is tax management, and this is a step towards achieving tax planning. You cannot simply you plan your tax without managing your tax. So that is why I said that it is not a standalone concept. Both coexist with one another. Tax management is a part of tax planning. Tax planning is not possible without tax management. Now, the next slide gives you the methods of tax management, how to manage your tax. There are many cases where you have the concept of TDS, tax deducted at source, or you have another concept called TCS, tax collected at source, or there will be payment of tax. You pay your tax on time. Maintenance of accounts, that is meant for all traders and other professionals who are compulsorily required to maintain, or who you can voluntarily maintain your accounts. Or it can be auditing of accounts. You do it everything legally as time bound. Payment of certain sums. What do you mean by this payment of certain sums? In case you have violated any rule or regulation, it calls for, it amounts to an offense, thereby it leads to penalty, and you pay your penalty on time. You pay your penalty on time. If you have not paid your penalty on time, obviously fine will be imposed on penalty. So that is payment of certain sums. In case you have committed an offense and you are penalized, you pay your fine, penalty, interest, etc., on time. These are certain sums other than tax what an SSC is liable to pay. You furnish your returns on time, that is filing of your returns on time. It can be voluntary filing, etc. Then documentation and maintenance of records. What happens in this documentation and maintenance of records? Documentation, you maintain your records properly, or it can be review of orders. Any orders which may prove beneficial to you, you work according to that. And then you have the last slide, that is a comparison what I have made between tax planning and tax management. Now, tax planning, it is a very wide term and it includes tax management, whereas tax management is simply a part of tax planning. That is, it is the first step towards tax planning. Tax planning emphasizes on reduction of tax liability, whereas tax management, it emphasizes on compliance of legal formalities for minimizing tax. What all you should do, not to do, all those things, do's and don'ts you list, and what all things you are supposed to do, you do it. Now, tax planning needs every person, may not need tax planning. It may be like, I have income, but I have my income which is either exempted income, I need not pay tax, or it can be like, I do not have taxable income. Whereas tax management is essential for every person. Suppose my gross total income comes to 3,50,000 or 4 lakh. Now, in this particular case, what I can do is, if I know how to tax plan, I can take the benefit of deductions, thereby reduce my gross total income of 3,50,000 or 4 lakh to 2,50,000 if I am an SSA who is below 60 years of age. So tax management is essential for all, whereas tax planning is not essential for all. Tax planning helps in decision making, how to invest your money, whereas tax management helps in complying with conditions for effective decision making. Tax planning, it aids in claiming various deductions and exemptions, whereas tax management, it helps in complying with conditions for claiming tax benefit. Now, tax planning, the function of tax planning is a comparison of various alternatives before selecting the best one. Like if you have long-term capital gain. And we have discussed earlier, there are many methods of reducing your long-term capital gain. The first and the foremost is directly you can pay a tax of 20% if it is long-term, and short-term 15%. But if you are not willing to pay either 20% or 15% tax flat rate, what can you do? You have other options. You can reinvest in the same asset, or it can be like you can invest in long-term specified assets, right? So you have various alternatives. You compare and you select the best one where your tax liability comes least. Whereas tax management, it involves maintenance of accounts in prescribed form, filing of returns, payment of tax, etc. That is the method to be followed for tax planning. Tax planning looks for future benefits, whereas tax management, it relates to past, present, and future. What you should have done, what you should do now, and what you should do in future. All those things comprise under tax management. So that was my last slide. We have not completed half an hour, I think. But are there any queries to be asked? If you have any doubt, anything, you can drop your message through the chat box. I hope we can continue our session next class by on the topic offenses and penalties. I would like your response. Do type your response. I'm waiting for your response.